Okay, so we'll give a go at doing the cash flow statement from the mock. Um, so we've got to do our abridged profit and loss account first. So remember, this is the one that starts at the bottom. So we'll look for a profit or loss balance from last year, which is 233. And then we take our profit and loss balance from the start of the year, or in effect, 233 is from this year. We take our one from last year, 178,500. And then we're trying to work out, well, what number is needed to be added to 178,500 to get to 233. So you just sort of work backwards. So it's 233 minus 1785, and that gives you a retained profit of 54.5. So 54.5 plus 1785 is 233. We're looking at our dividends next. So normally it tells you at the bottom um, what dividends are. So there's no dividends due or anything like that. So at the bottom it'll tell you dividends paid for the year were 60,000. So we have to assume that that was the total dividends. So remember, you take dividends away. So you're looking what number minus 60,000 equals 54.5. So that'd be 114,500. Basically, do the opposite. So add it back on. That's your profit after tax. Your taxation then. Taxation charge on profits for the year was 75,000. So again, that's straightforward. So some number minus 75,000 is 114. So if you add it back on, that'll be 189,500. Then you have your two interests, debenture interest and investment interest. So we look for debentures. They're 8% debentures, and it's 8% of either 200,000 or 150 or something in the middle of the two of them. So we'll just see what it says about debentures. 50% debentures were issued on the 1st of the 4th. So it's going to be a combination of both. So I'm just going to have to work it out here. So for the first 4 months of the year, it's going to be 8% of 150,000. And for the remaining months of the year, it's going to be 200,000. So that's not like you've seen that loads of times in question ones. So that'll be 12,000, I think. 200,000 by 12. That's wrong. I'm gonna have to assume that number is wrong. Just bear with me for a second. Sorry. It should be 3 and 9. That's a terrible mistake. You issued them on the 1st of the 4th, so you had 3 months there. And then 9 months here. And it'll make it hopefully a little bit more user friendly. Yeah, so that's 15,000 in total. So obviously just take care of the dates. You'll end up making stupid mistakes like me. So 15,000 anyway. And then you have your investment income. So we'll see what it says. The quoted investments yield a fixed return of 4% per annum. So the investments are 100,000. Again, see, the last year they were 150. So at the start of the year we had 150. At the end of the year we had 100. So we have to see when we sold the investments. They were sold halfway through the year, so we have to do the same thing. So for the first half of the year we had 150,000, and for the second half of the year we had 100,000. So it's going to be 4% of 150,000 by 6 months, and 4% of 100,000 by 6 months. So that's 3,000 and 2,000. So So it's a total of 5,000. So again, just be careful with that. Always read the stuff at the bottom. Maybe read it beforehand, before you start it off, just to and maybe highlight ones that you haven't seen before. So they're very straightforward. Like they're both done the same way, but you mightn't have seen them before. Anyway, that's added on. So again, working backwards, what number plus 5 minus 15, or what number minus 10, I suppose, is 189. 500, so it's going to be 199,500. Okay, and that's your first part done, and that becomes your answer for your second part, or your starting point for your second part, which is your reconciliation of operating profit to net cash inflow from operating activities. So we'll do the easy ones first. The change in stock, change in debtors, and change in creditors. So and there's bad debt provision, just note that. So I'm gonna just do it here actually. So I just noticed there's a bad debt provision. So I want to be aware of that. Is there any other ones maybe? It's depreciation. There's no goodwill. No, we're fine there by the looks of it with that. So anyway, we'll do our change in stock. Stock has gone up by 55,000, which means cash is going down by 55,000, and that should be your clue to do the rest of them. Debtors is done the same way. Debtors has gone up, so cash goes down. Debtors gone from 120 to 180, so it's an increase of 60. And then of course creditors has gone down, which is the same as debtors going up, I suppose. So decrease in creditors of what would that be? 37,000. So they're all minuses. So they're all decreases. You should probably call them decreases. Liabilities will be the same, or bad debt provision will be done the same as the liabilities. So they've gone up. So your bad debt provision has gone up. Reduces your profit without reducing your cash. So a decrease in bad debt provision, you need to add it back on. Okay, it'd be a bit like it would be the opposite rules to stock and debtors basically. I'm just going to put that in there. Just change that to decrease. I'll change these 3 to increase. Now I know I'm going through this fairly fast, but I want to get it done before tonight's show starts at 11 o'clock. So anyway, the profit on the sale of buildings and the depreciation for the year. So we'll have a look and see what it says. Could be any old reason for the depreciation for the year. Sometimes it gives it to you. Fixed assets were sold with a total depreciation had been provided for, were sold for 41,000. Well, that's going to be the profit. So I'll do that now while I'm here. So the profit or loss. So the assets cost 60, the depreciation at 26, so they're worth 34, and you sold them for 41. So you made a profit of 7,000. Remember, profits don't increase your cash, so you have to. They increase your profits, don't increase your cash, so you have to do the opposite and take them away. There's nothing else that will help us with the depreciation really there. We have to take account of that 26,000. So it's just going to be the differences in all of these. So luckily enough, they don't have a load of different fixed assets. They just tell us the cost and the depreciation. So depreciation started at 90. Remember, you sold an asset with depreciation at 26. So the depreciation has really gone from 90,000 and it's gone down by 26,000, which will give you 64,000. And it's gone from 64,000 up to 170. So plus what number is 170? Because last year's number plus the charge for this year has to be this year's number. So that's going to be 100 and what would that be? 106,000 would be the depreciation. So this year's charge is 106. So that's a plus as well. Remember, depreciation reduces profit but doesn't reduce cash. So hopefully I've done all this right. Won't know until the end, but 149,500 is our net cash inflow from operating activities. Hopefully that's okay. Alright, we move on. That 149,500 becomes your starting figure, obviously, over in our cash flow statement. So 149,500. Okay. Your investment income received. Now remember what we're looking at here. Last year's plus our answer from part A minus this year's. So I'm just going to do these here. So it'll be last year, add the charge, and take away this year. And that will be for any of the ones that are mentioned in current assets or current liabilities that we have to put in. We don't do stock, debtors, provision for bad debts, or government securities or cash, but we do investment income, taxation, and interest. They're the ones I'm interested in when it comes to that. So we look at our investment first, because that's the first one we come to. So last year's amount was 0. The charge, which I said the answer is from part A, is for interest is 5,000. So it's 0 plus 5,000 minus what's due to us of 1,000. That'll give you 4,000. Okay, so the amount we receive is 4,000. So that's going to be added back on. So we're supposed to get 5,000, but we only got 4,000. Now we do the same for debenture interest. Last year's debenture interest due was 12,000. The answer from part A was 15,000. So we owed 12,000 from last year. We owe a further 15,000 from this year. And at the end of the year, it tells us we owe 16,000. So that means if we owed last year 12,000 and a further 15,000, we owe 27,000. If we only owe 16,000 now, if you take that 16,000 away, that'll give you the amount that you've paid. So that's 11,000. So the debenture interest is minus 11,000 there. Okay, you do the same for taxation. We go last year. So last year we owed 65,000. We had a further tax on profits. I'll just check it down here, it'll be easier. The tax on profits for the year is 75,000. So we owed 65. We owe a further 75. That brings us up to 140. But it tells us at the end of the year we only owe 60,000. That means we must have paid 80,000. So our taxation paid is 80,000. Right, the receipt from the sale of fixed assets, straightforward enough, tells us 41,000. That's how much we got for them. Did we buy any fixed asset? Well, we did, because fixed assets have gone up. They've gone from 550 up to 725, which would indicate we've spent 175. But That 550 includes the asset that we've sold, which cost 60. So the assets have gone from, in effect, 550, and they've gone down by 60. So they've gone to 490, and then they've gone from 490 up to 725. So we must have bought an asset costing the difference between the two of those, which would be 235,000. So our cash position has gone down by 235,000. We also know that we sold investments. Now that could be something you forget about, but if you remember, fixed asset, the quoted investments, which cost 50, were sold for cash, their book value. So we got 50,000 for those. Now the dividends, we're going to go back to this process. So dividends started off at 0. There's no dividends due. The charge for the year, or the dividends for the year, was 60,000, and there's nothing due at the end, so dividends are 60,000. So that's nice and easy. That's minus 60,000 up here because we've paid them. Now we'll do our sum to get our net cash inflow or outflow. That's 291. I bet you I've made a mistake there. Yeah, of course I did. Left out the opening figure. Sorry, so it's 141,500. Purchase of government securities. So we talk about government securities. That's what we mean there. It'll be an asset. So it'll be they've gone from 25 to 46. So they've gone up by 21,000. So we've bought them. We haven't sold them. So it's a minus number. Then our financing, which are capital and reserves here. We've taken on debentures, so it's not a repayment of debentures, it's an issue of debentures. And that's good for our cash. It's not good for our profits, but it's good for our cash. So our debentures have gone up by plus 50,000. Our share capital has gone up by 100,000. And our share premium has gone up by 20,000. So that in total is 170. And then if you just, let me just stick in an extra line here. If you do the sum from there, as far as here, you get your increase or your decrease in cash. So 7,500. Now I can check that that's right by just looking at my cash and my bank figures. So my cash here has gone down by 6,500, but my bank overdraft has gone down by 14,000. So the difference between 14,000 and 6,500 is my 7,500. So that increase in cash is right. Okay, so the final part then is the reconciliation of cash to net debt. So start off with your increase in cash, which is 7,500. We look at cash used to purchase liquid resources. And by liquid resources, we mean government securities. So our government securities have gone up by 21,000. That's positive because the government owe us that money. So that debt is debt to us. So that's a plus. Any debt to us is a plus. Any debentures or anything like that, debt to others is a minus. So for instance, our debentures is going to be a minus. So our next one. So cash received from the issue of debentures. So our debentures have gone up, so that's going to be a minus because our debt is going. If we take debt as a minus, debt that we owe is a minus, and debt that's owed to us is a plus. That's what it looks like. So our change in net debt is 21,500. Now, just do a working here. Go down a bit. So if we look at our net debt at the start of the year versus our net debt at the end of the year, we can say, well, what's considered net debt? So we've got our debentures. So they're 150,000 at the start of the year. I'm going to take them all as positives for the time being, but we'll turn the final answer into a negative. And at the end of the year, debentures is 200,000. Then we've got our bank overdraft. So at the start of the year it was 45, and at the end of the year our bank overdraft is 31. Then you've got your cash. Now cash is the opposite of a bank overdraft, so they're going to be minuses. So at the start of the year was 18.5, and at the end of the year we had a cash position of 12,000. So we'll take them as minuses. And then we've our government securities. Again, they're minuses. So we've got at the start of the year 25,000, and at the end of the year 46,000. Now, hopefully, these will be all right. So you take it that your debentures, of course, they should both be minuses. So if you take it that the liabilities are pluses and the assets are minuses, we can work it out from there. So if for instance bank was up here, you would take it away. Anyway, your net debt at the start of the year is 151,500 or minus 151,500. Your answer will be a minus. If you do the two together, your net debt at the end of the year should be the same, 173. It is. So that's the non-theory part of that done. Hopefully that's of some use to you. Actually, it's quite a straightforward cash flow statement. It wasn't one of the harder ones, but hopefully it went alright for you. We'll see you in class.